You could look at the chart and say, oh yeah, this is just a normal consolidation pattern. We're range bound between kind of, 50K and 75K. And we're just prepping for the next major assault. You could also look at it and say, it's a little distributive, right? We've had 3 lower highs and 3 lower lows. We really need to take out 68.6 in the next run. And that, if we don't do that, I start to get a little nervous, because you talk about, the institutions are coming. Paul Revere was right with one caveat. The institutions, the biggest ones, the ones that everybody, brags about when the 13Fs come out. Oh, Millennium has $2 billion of Bitcoin ETFs. No, yes, they do, but they're short 2 billion of futures on the other side. They have 0 net position, and that future selling is causing this whoop-de-doo pattern. We all think we won the war, but be careful of the other side. They're not as dumb as we think they are. Maybe Ms. Warren is, but I suggest with Bitcoin, which is just buy it, right? Hashtag just buy it. I don't mean buy it all at once. Buy some today, buy some tomorrow, buy some next week, buy some the week after, buy some next month, and just accumulate your position over time in the most valuable network the world has ever seen.
Mark Yusko begins by comparing the Bitcoin market to a roller coaster ride, a thrilling journey that ultimately brings you back to where you started. He observes that since February, Bitcoin's price has been stuck in a repetitive cycle, characterized by sharp ascents and descents, without making significant long-term progress. This pattern, Yusko explains, is a consolidation phase where Bitcoin's price has been range-bound between $50,000 and $75,000. However, he cautions that this could also be seen as a distributive pattern, with 3 lower highs and 3 lower lows, signaling potential bearish tendencies. One of the key points Yusko emphasizes is the role of institutional investors in the current market. He notes that while there's been much excitement about institutional adoption, particularly with large entities like BlackRock entering the space, the reality is more complex. Institutions are not merely buying and holding Bitcoin. Many are engaging in sophisticated trading strategies, such as being long on Bitcoin ETF while shorting Bitcoin futures. This, according to Yusko, creates a whoop-to-do pattern in the market, where prices are manipulated by these large players to their advantage. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
But the real thing about a roller coaster is you end up in the same place. You take a trip and you end up in the same place. And we've been stuck on this roller coaster since February, the end of February. And, we've had these, kind of where we lock in the track and go up, and then we come down, and then we go back up. The one thing that has me nervous, Scott, is you could look at the chart and say, oh yeah, this is just a normal consolidation pattern. We're range bound between kind of, 50K and 75K. And we're just prepping for the next major assault. You could also look at it and say, it's a little distributive, right? We've had 3 lower highs and 3 lower lows. We really need to take out 68.6 in the next run. And that, if we don't do that, I start to get a little nervous, because you talk about, the institutions are coming. Paul Revere was right with one caveat. The institutions, the biggest ones, the ones that everybody, brags about when the 13Fs come out. Oh, Millennium has $2 billion of Bitcoin ETFs. No, yes, they do, but they're short 2 billion of futures on the other side. They have zero net position, and that future selling is causing this whoop-de-doo pattern. And I keep going back to the 2017 quote from Leo Melamed, right? So in 2017, last bull run, not the last bull run, but the bull run back then. And, everyone was starting to say, hey, this thing is here. And the big banks were like, F that. No, this needs to go away. This needs to be killed. And Melamed, who runs the CME, said, we'll tame Bitcoin. I'm like, that was an interesting choice of word, right? That, wolf of all streets, right? Wild animals, we got to tame them. And no one really paid attention. And actually, you and I did a show, it was either on the 9th or the 10th. It was literally right as the ETFs were getting approved. And I said that everyone's focused on the ETF approval. And that's awesome. But what they're not focusing on is on the same day, January 10th, the CME approved a whole slew of other futures contracts. And the problem with futures, and this is, again, a dirty little secret that, it's like, watch the airplane, look out for the submarine. Everybody's like, oh, this is not a security. Bitcoin is not a security. Ethereum is not a security. Be careful what you ask for, y'all. You got exactly what they wanted. It is deemed a commodity. Why does that matter? Because commodities can be and have been controlled by the price, by this futures morass. We all think we won the war, but be careful of the other side. They're not as dumb as we think they are. Maybe Ms. Warren is. It's not the money that we want, right? Hunter and Matt and those guys fighting the good fight, hand to hand, going to the financial advisors and getting them to change their portfolio, to hashtag get off zero, right? Which you and I have been talking about for years, get off zero. That's still coming, right? That's probably worth 300 billion of asset flows into Bitcoin. That's just 1% of the 30 trillion that's out there. So we're a long way from getting those. What's coming in now, those big numbers, especially the BlackRock numbers, are literally Millennium, Citadel, Sovereign Wealth, all these people who are doing this structured trade where they are long the ETF and short the future, and they just arb the spread. And that spread used to be, for a very short window, as high as like 30%. Now it's down, I haven't looked lately, but it's around 10, maybe it's high single digits. We need it to go below the cost of funding, because then the incentive to do that trade dissipates. And yes, the flows will look bad, but there'll be real flows. There'll be flows of people who are buying, locking up, and using it as the diversifying asset that it should be in a traditional portfolio. People don't think they're as smart as the experts. Why do we all, humans, believe we are the smartest investors? When there are professional investors, people who do this, their whole life on the other side. And if you're not at least asking the question, if I'm buying this, who's selling it? Because I always love, are there excess buyers in the market today? No, there's not. There's an equal number of buyers and sellers every single day. Every day. And so if you're selling, someone's buying. If you're buying, someone's selling. So think, at least for a minute, what does that person or persons know that I don't? Now, if you're doing what I suggest with Bitcoin, which is just buy it, right? Hashtag just buy it. I don't mean buy it all at once. I mean, buy some today, buy some tomorrow, buy some next week, buy some the week after, buy some next month, and just accumulate your position over time in the most valuable network the world has ever seen. And I actually will stand by this statement, at least as far as I can see in my lifetime. I think it's unlikely that we'll ever see a more valuable computing network in my lifetime. Now, I hope to live a nice long life, but this is a confluence of many events: technological trends, human trends, monetary trends, and this unique functionality isn't going to be replicated in the near term, and it's not going to be displaced in the near term, because migrating from trust, which had an 838-year run, I mean, just let that sink in for a second. The trust industry, the banking industry, invented 839 years ago, has had a good run. And now we have the truth industry, which is blockchain-based, Bitcoin anchored. That's a superior technological advancement that is unlikely to be displaced anytime soon. Doesn't mean never, ever, ever. I mean, there could be something that I can't imagine with quantum or something. But I'm not going to spend my time worrying about it, because when it comes, we'll deal with it.
Yusko shares his initial concerns about Bitcoin's origins, specifically the theory that it might have been created by the CIA as a way to control the global financial system. He recounts a conversation with Scott Stornetta, one of the pioneers of blockchain technology, who assured him that while the idea is intriguing, it's technically impossible due to the way Bitcoin is designed. Stornetta's explanation puts Yusko's mind at ease, reinforcing his belief in Bitcoin's resilience and security. Yusko also addresses concerns about the Satoshi wallet, the large stash of Bitcoin presumably held by Bitcoin's mysterious creator falling into the wrong hands. He argues that even if these coins were to be seized by a government or other entity, it wouldn't destroy Bitcoin. Instead, the value would simply shift to the remaining coins in circulation. As long as there is at least one Bitcoin left, the network will continue to function and hold value.
We all love Bitcoin. And I had this fear, right? When I first got into this back in 2013, I Googled Satoshi Nakamoto because I wanted to know something about him. And what came back was Intelligence Central. Satoshi means intelligence. Nakamoto is the surname of families from the central province. I'm like, oh, that's pretty close to CIA. So wait a minute, what if the CIA created Bitcoin and it was a way to get people to convert their shitty currency into this good thing, and then they steal it out a back door? And so Scott Stornetta, who, if you read the white paper, he's mentioned 3 times in the back in the footnotes, he invented the term blockchain. He's a venture partner of ours. And I asked him, I said, Scott, what do you think about this? You know, Satoshi Nakamoto means Intelligence Central, and what if this was created by the CIA? And he said, nope. Like that fast. Nope. Like, Scott, what do you mean no? Like, he says, well, the way you're thinking about a backdoor is impossible. It's not a bad thought. I mean, I never really thought about it, but yeah, it could be. But the way you're thinking about a backdoor, it's impossible with Bitcoin because of the air gap. Now, with Ethereum, that's another story. I was like, whoa. So that was funny. So we don't have to worry about Bitcoin having a backdoor. There is no leader for them to arrest. And now with Ethereum, there is a leader and there's probably a backdoor, but and that's not an accusation. I'm just saying, he says it's technologically possible in that system, right, not in Bitcoin. So that makes me feel better. Now, it doesn't mean that all of what's going on, and actually doesn't mean that the Satoshi wallet isn't owned by the CIA. I can't prove that it is or isn't. But even if it is, people say, oh, well, if that were to spend, then it goes to zero. No. Even if BlackRock, which to your point earlier, they can't do because it's client assets. But let's say this little law that just got changed that does something about the property rights and that, let's say that allows them to use force majeure or eminent domain to seize the BlackRock Bitcoins. I think there'd be a class action lawsuit, but let's say that happens. Unless they get 100%, not 99.9, not 99.8, unless they get 100.00%, it doesn't matter. Because all that happens is those confiscated coins or Satoshis, let's make it Satoshis, let's not make it 21 million, let's make it 2.1 quadrillion, Satoshis, unless they get all 2.1 quadrillion, as long as there's one Satoshi left, the value of the network goes into that Satoshi. And so as long as there's one Bitcoin or two Bitcoins or five Bitcoins, all the value shifts to what's left, and those other things become lost or stolen. And as Satoshi himself said, right, just consider lost and stolen coins as a contribution to the network.
Mark Yusko's analysis provides a sobering yet optimistic view of the Bitcoin market. While he acknowledges the challenges posed by institutional manipulation and the complexities of Bitcoin's classification as a commodity, he remains steadfast in his belief in Bitcoin's long-term potential. For investors, Yusko's message is clear: be aware of the forces at play, but don't lose sight of the bigger picture. Bitcoin is more than just a speculative asset. It's a revolutionary network that will continue to transform the financial landscape for years to come. Please like and subscribe my channel.